Welcome to Accounting Suite Academy. Today we're going to learn about one of the most important concepts in inventory accounting, landed cost. If your business purchases inventory from vendors, especially from overseas, the purchase price is rarely the true cost of the goods. There are usually many additional expenses before the products are ready to be sold. Freight charges, import duties, customs fees, insurance, transportation costs, handling fees. These expenses are known as landed costs. Instead of treating these expenses as ordinary operating costs, accounting standards require them to become part of the inventory value. This allows inventory to reflect its true acquisition cost and ensures that product profitability is calculated accurately. Let's see how Accounting Suite makes this process simple. Before using this feature, open the Purchase settings. Enable the Landed Cost option. Once enabled, the Landed Cost tab becomes available in several inventory documents. You can use it in item receipts, bills, and warehouse transfers. The first step is creating a service item that represents the additional cost. Create a new item. Select the service item type. Enable the Landed Cost option. Then choose how this cost should be allocated. Accounting Suite supports several allocation methods. You can distribute costs by quantity, by item value, or by weight. Choose the method that best reflects how the expense should be shared across your inventory. Now let's receive our inventory. Before generating the item receipt, open the purchase order and enable the Use Item Receipt option. This allows the receiving process to be handled separately from billing. Now you can generate the item receipt directly from the purchase order. If your workflow doesn't use item receipts, you can also work directly with bills. Warehouse transfers are supported as well. Now let's complete our purchase order. Add all the inventory items you want to purchase. Once everything has been entered, save the purchase order. Now generate the item receipt. When the item receipt opens, navigate to the Landed Cost tab. This is where we can add one or more landed cost services and allocate the additional acquisition costs to our inventory. If needed, enable Allocate Landed Costs manually. This allows you to override the automatic allocation and define exactly how the cost should be distributed across individual inventory items. In most cases, freight, customs, or insurance charges arrive as separate vendor invoices. Accounting Suite is designed specifically for this workflow. Simply link an existing bill that contains the landed cost service, or create a new bill directly from the document. The application automatically retrieves the amount from the linked bill and assigns it to the inventory. One service bill can even be allocated across multiple inventory documents, making it easy to distribute shipping costs between several receipts. Once the bill is linked, Accounting Suite performs the allocation automatically. Depending on the allocation method you selected, the system distributes the additional costs among all inventory items. This ensures that every product receives its fair share of freight, insurance, customs duties, or other acquisition costs. As a result, inventory valuation becomes more accurate, gross profit calculations become more reliable, and financial reports better reflect the true cost of your products. Let's briefly look at the accounting behind the process. When the vendor bill for the landed cost is recorded, the system posts the amount to the landed cost clearing account while creating the accounts payable liability. Later, when the landed cost is allocated to inventory, Accounting Suite automatically transfers the amount from the clearing account into inventory. The inventory account shows the total acquisition cost, not just the purchase price. This confirms that the additional expenses have been successfully included in the inventory value and that the landed cost has been calculated correctly. Proper landed cost allocation is essential for every inventory-based business. Without it, inventory is undervalued. Product margins appear higher than they actually are. Financial reports become less accurate, and pricing decisions may be based on incomplete information. Accounting Suite eliminates this complexity. Additional acquisition costs can be linked directly to inventory. Allocation is calculated automatically. Accounting entries are generated automatically, and inventory always reflects its true acquisition cost. Landed cost is more than just an accounting feature. It is an essential part of accurate inventory valuation. Accounting Suite makes the entire process simple, flexible, and fully integrated into your purchasing workflow. Don't forget to visit our website and YouTube channel. Thank you for watching.